Hi everyone, welcome back to my YouTube channel. It's me, your manuishu, and in this video I will be doing more 5 questions of taxation from Kaplan kit. So in the last video we did up to 5, and I hope there will be no any doubt. In case I'm doubt, do ping me. And if you're watching my video for the first time, don't forget to subscribe my channel and share it among your friends so that they could also have the benefit. And don't forget to hit the bell icon for more updates. So in this video, we will be doing the question number 6, and the question is asking what is the OLED total van and van fuel benefit for the tax year 2023 and 24. So OLED is provided with the van by her employer on 6 April 2023, which she will use 60% for the business and 40% for the private purpose during the tax year 2023 and 24. The van has a list price of 30,000 and CO2 emission of 158 gram per kilometer. All employer also pay for the fuel used on the private journey in the van. So, what is the total van and fuel benefit for the tax year 23 and 24? So, whatever the information has been provided in the scenario, I must say your mind has been hitting toward the car benefit calculation, right? Because they have told the business has the van has been used for the business purpose, private purpose. They have given the fuel, CO2 emission, list price. But in case of van, the whatever the amount we will get, it's fixed, right? For the tax purpose. For the van, I think it's 3,960, and for the fuel, it's 757, right? So adding all these two, we will get just a second, 3,960 plus 5. So it's 4,717. It's total taxable benefit. Okay, so just they have given the information. It's like a car. They have given the list price. They have given the CO2 emission. So you might get confused and calculate the taxable benefit as like in the car. But in case of van, the benefit is fixed, and for the van it's 3,960, and for the fuel it's 757. Okay, so next question. Ifram have been employed for many years and has also recently become partner in the partnership. He is in the process of completing his tax return and has asked you to advise in regarding the interest payment he has made. Identified by ticking the appropriate box whether his interest payment represent qualifying interest and are deductible from his total income or are not qualifying. In today's video, I said that if we are taking a loan for the qualifying purpose means like if we are taking the loan to buy the plant and machinery to be used in the unincorporated business like sole proprietorship, partnership, or if you are buying the asset to use in your employment, or you are taking the loan to fund working capital. These are the qualifying expenses, right? And the interest which you are paying on the loan are deductible from the total income to arrive at the net income. So the question is talking about the same qualifying interest, and what's non-qualifying one? Like you are buying the states, you are buying the property to let out, and these are the non-qualifying purpose loans, right? So let's read the option and tick out the box which will be the qualifying interest payment and which will not be the qualifying interest payment. So first one is interest paid on the loan he incurred to purchase a laptop for use in his employment. Obviously, it's qualifying one because the asset is used in the employment. Second, interest paid on the mortgage for his main private residence, so it's not qualifying. And one more thing I would like to add: if you are taking the loan to for the main residence which has been purchased through the taking if you have taken a loan to buy the residence main residence, in that case, interest expense which you are paying on those loan amount is not allowed expense. However, you will get 20% credit on those expense from your tax liability. Okay, so it's not a qualifying one. And interest paid on the amount he borrowed to finance acquisition of 2,000 shares in the quoted company. Obviously, it's investment type of the thing, so it's not a qualifying one again. And last, interest paid on the loan he took to invest capital in partnership in order to become a partner. Obviously, it's qualifying one as partnership is unincorporated business. Okay, so next one, Samuel is planning to leave the UK and to live overseas and having always been the resident in the UK. So he's planning to live in the UK. I'm sorry, leave the UK to live overseas and have always been the resident in the previous tax year. He will not automatically be treated as either resident in the UK or not resident in the UK. Samuel has several ties and with the UK and will need to visit the UK for 60 days each tax year. However, he wants to be non-resident after he leaves the UK for the first two tax year after leaving the UK. What is the maximum number of ties which Samuel could keep with the UK without being treated as a resident in the UK? For this, I need to capture some information. Just a second. Okay, so I hope the screen is visible. Okay, so even though not visible, just try to open your book. I will explain it out. So basically, he is planning to leave the UK and wants to be overseas, going to be living the overseas and has previously been the resident. Okay, and so basically, question is asking how many ties he should qualify to be a non-resident after leaving the UK. So if we will look at the tie box, he was previously resident, right? The question has mentioned that somewhere he has always previously resident, okay, and he will visit after leaving the UK. He will visit for at least 60 days, right? So if we will go for 60 days, it will fall in this row, right? And if we will look at the how many ties need to be qualified for UK resident, it's 3 ties, right? So maximum 3 or more. So 3 or more, it means if we will have only 2 ties, we can be a non-UK resident in that particular tax year, right? So it means 2. Next question is, what is the maximum number of days which Hannah can spend in the UK and be treated as a automatically non-resident in the UK for the tax year 23-24? Okay, Hannah was a UK resident in the tax year 22-23. He worked full time in Egypt in the tax year 23-24. So if you are working full time in the overseas countries, the maximum days to be spent is 91 days, right? So if you will spend 90 days, so you will be automatically treated as a non-UK resident. Less than 90 days, 91 days, so it's 90. Okay, so